Axis Bank is the third largest private sector bank in India. The bank has its head office in Mumbai and it has 3,703 branches and 13,814 ATMs and 9 international offices. Hello friends, today I am going to share the brief history of Axis Bank from starting to till now. If you have not subscribed my channel yet, you just subscribe my channel Avnish Surya Vlog to get information and to get knowledge about the corporate world. So let's start. Axis Bank, also known as UTI Bank, was born in 1994. Earlier, Unit Trust of India (UTI) was India's largest mutual fund. In 1994, the RBI issued licenses to 10 private sector banks like HDFC Bank, ICICI Bank, IDBI Bank, UTI Bank, Bank of Punjab, Centurion Bank, Global Trust Bank, IndusInd Bank, Times Bank, and Development Credit Bank. Interestingly enough, of these 10 licenses, only 6 survive today. Axis Bank found itself in a unique position compared to the other financial institutions like HDFC, ICICI, and IDBI. In 1963, UTI for a long time was the only mutual fund available to Indian citizens, and it became competitive advantage for Axis Bank. Due to this strong brand name, Axis Bank commenced operations in its earlier avatar as UTI Bank in April 1994. Axis Bank's strategy was to use UTI's 35 million unit holder base and around 48,000 crore rupees corpus as a base to sell its products. However, Axis Bank got so much business from UTI that the RBI offered direct membership to start the operations. UTI chairman S.A. Dave had Supriya Gupta as Axis Bank's first chairman and MD, who was deputy managing director at SBI and had 37 years of working experience at SBI, including MD of State Bank of Bikaner and Jaipur. In the first 5 years of its experience, Axis Bank built a loan book similar in size to HDFC Bank and ICICI Bank, with one fortunate difference: its gross NPAs were significantly higher. When Axis Bank was struggling with serious concerns on corporate governance due to the quality of its corporate lending, the appointment of Dr. P. Jayendra Naik on an MA and a PhD in economics from Cambridge University, UK, came as a big boost to the bank's image. Axis Bank's share price nearly tripled in 2 months between 30 November 1999 and 4 February 2000, based purely on the news of Naik taking charge. By financial year 2000, average salaries at Axis Bank was 2.43 lakhs, were far below from HDFC Bank 2.85 lakhs and ICICI Bank 4.63 lakhs. In financial year 2002, Axis Bank raised around 157.5 crore rupees via a preferential allotment of shares to private equity investors. At the end of financial year 2000, Axis Bank had 49 branches compared to 110 for HDFC Bank and 81 for ICICI Bank. In the next 9 years, by the end of financial year 2009, Axis Bank's branch network expanded at a CAGR of 38% to reach 835 as compared to HDFC's 34% and ICICI Bank's 19%. By the same year, Axis Bank had the highest ratio of ATMs per branch, 4.3 ATMs per branch compared to 3.3 for ICICI Bank and 2.3 for HDFC Bank. With initial focus on balance sheet granularity during 2009 and 10, by 2010 and 11, the bank began addressing its reliance on wholesale funding and sought to scale up retail deposit balances. For the first time, an advertising campaign focused solely on retail deposits was launched in 2010 and 11. Axis Bank was the first bank in India to launch Aadhaar-based e-KYC in India. Axis Bank also opened offices at major international money centers like Singapore, Hong Kong, Dubai, and London to get its foot into big-ticket corporate banking. The share of international business has gone up from 6% in financial year 2008 to 11% in financial year 2015. Today, Axis Bank has employs over 59,600 people and a market capitalization of 1.31 trillion. The bank has 12 owned subsidiaries like Axis Private Equity Limited, Axis Trustee Services Limited, Axis Asset Management Company Limited, Axis Mutual Fund Trust Limited, Axis Bank UK Limited, Free Charge, Axis Securities Limited, Axis Direct, Axis Finance Limited, Axis Securities Europe Limited, A Trades Limited, Axis Forex. So friends, thank you so much to watching and listening our video. So don't forget to like, share and subscribe. Thank you.